Hello, child of God. This is CPA Shadrach Adino, an expert on wealth creation and management. I'm also a practicing auditor and a financial management consultant. Above all, I'm a born-again child of God and a pastor. May I take this opportunity to welcome you to today's episode. In our previous episode, we guided you on how to maximize your profits, what you can do in order to get maximum returns on your business. Now, to be able to reach your business, dear listener, I'm sure you must have sacrificed a lot. Deny yourself your earnings, save them to be able to start a business. Now you are at a point of running your business and you're expecting your profits to be maximized. You're expecting your business to make profits for you. However, I want to guide you today that there are parasites that prevent people from maximizing their profits. And one of the parasites that prevent people from maximizing profits is something called fraud. You have employees. They are supposed to be supporting you in making that business make profits, but you realize that this business is not generating profits as you expect them. Instead of the business standing firm and making profits, you detect that this business could be nosediving. This business could either be stagnating or deteriorating. One of the things that you must be careful for in a business that has employees is this parasite called fraud. Now you're a manager, be careful for fraud. You're a business owner, be careful for fraud. You're a staff, you need to be careful that fraud could be eating into your business. Now when I talk of fraud, what am I talking about? Fraud is defined as a deliberate and intentional act of deception, and it is intended to take advantage of another person or person's gain so that somebody can illegally gain or deprive that person of his property. Fraud mostly involves monetary illegal gain. Somebody is playing foul, is playing games with your business in order to illegally gain some profit from that illegal activity. Now, when we talk about fraud, I want to bring you to the process that leads to fraud, so that when you understand this process, you will detect them earlier before fraud pulls your business down. Now, what is this process that leads to fraud in a business? We as experts, we give them a term called the fraud triangle. There must be a fraud triangle for fraud to take place in your business. Now, when we talk about fraud triangle, it's just like the triangle shape. A triangle has three sides. Therefore, fraud triangle has three indicators that confirm that fraud could be taking place. Now, for fraud to take place, number one indicator is opportunity. Number two, opportunity. Number two indicator is pressure. The third indicator is rationalization. In other words, we are saying for fraud to take place, there must be an opportunity, there must be pressure, there must be rationalization for fraud to take place. Let me explain what these three items refer to. When we talk about opportunity, opportunity happens when there is lack or inadequate supervision and review. When a staff is not being properly supervised, that gives that staff an opportunity to commit fraud. Number two, when there is lack of proper separation of duties, that gives a staff an opportunity to commit fraud. And when we talk about separation of duties, it means one person should initiate a transaction, but another person should record it, and a different person should finalize the transaction. When there is separation of duties, it prevents fraud from taking place. The third item is lack of management approval. Where transactions are initiated and finalized without a management approval, that is an opportunity for fraud to take place. The next item is where there is close working relationship with suppliers, that gives a procurement person an opportunity to collude with suppliers and commit fraud. The next item is where there is failure to enforce controls. Where an organization has internal controls which are not being enforced, that is an opportunity for fraud to be committed. The second item in the fraud triangle is pressure. What do we mean when we talk about pressure? We are referring to somebody or a staff having personal financial problems. Personal financial problems is a pressure for a staff to commit fraud. The next item is unrealistic deadlines and performance goals. When an employer gives a staff unrealistic deadlines, you are making that staff start thinking of committing fraud, bringing falsified information, bringing falsified records in order to meet the deadlines which are unrealistic. The next pressure for somebody to commit fraud is desire or pressure for status symbol. Somebody wants to be in the class of people who are driving. That is a desire to reach a certain status. When you see such a person desiring to reach where he is not yet ready to reach, that is pressure to commit fraud. The next item is pressure from increased family responsibilities. When there is pressure from home for you to supply certain needs at home, and yet you do not have enough resources with which to supply these needs, that pressure from home might trigger a desire for you to commit fraud. Within the fraud triangle, the third item is rationalization. Rationalization, another term for it is justification. Somebody justifies why he's supposed to commit a fraud. One of the examples where people justify why they should commit fraud is, I really need this money and I'll refund it when I get my pay. You're saying, yes, I have a desire for money. When I get my money, I will refund it. Let me tell you, the moment you take that money, even when you get your salary, you will not pay. And that is where you will start falsifying records to cover up for a fraud that you've committed. Another example is, I'm just temporarily borrowing this money from petty cash. Nobody will notice it. When that thought enters somebody, and you go ahead and borrow money from petty cash, thinking that nobody will notice it, that is where somebody will start creating vouchers to cover up for this fraud that is committed. Another example is, after all, I'm being underpaid. I deserve this money. When somebody starts to say, I'm being underpaid and is handling money, this person is likely to falsify records and take this money, saying I'm being underpaid. Another example is, somebody deducted my salary unfairly. Therefore, I must take this money so that I cover up for the deduction of my salary. So when somebody thinks he's being unfairly touched in terms of his salary, somebody is going to touch money unfairly. Now, dear listener, I want to give you indicators that fraud could be taking place in your organization. Having looked at the fraud triangle of opportunity, pressure, and justification for committing fraud, let me give you signs that fraud could be taking place in your organization, so that when you see these signs, your antenna should be raised that something wrong could be taking place here. Number one indicator is inadequate separation of receipt takers and record makers. You know, in a good organization where controls are properly working, the person who is receiving money and issuing out receipts should be different from the person who is recording this money in the cash book. But when these activities are not separated, That is a good indicator that fraud is taking place. Number 2, where there is low staff morale and the staffs are always complaining. I tell you, in an environment where staff motivation and morale is low, that is a sign that somebody could do a foul play with your organization resources. Number 3, where somebody is living beyond their means. You are changing lifestyle which is not consistent with your earnings. Now you need to ask yourself, this person is earning this level of salary. How comes this person is living in a kind of life status which is beyond that level of income? When you see somebody living beyond their means, my friend, that could be a red flag that somebody could be committing fraud in your organization. Number 4, where somebody is working excessive hours. People are supposed to close at 5. But this person is consistently working beyond 5. Let me tell you something that fraudsters do. They commit fraud after working hours. Most of them, not all, but most of them commit fraud after working hours. So when you see somebody consistently working after working hours, that could be a good indicator that fraud could be taking place. Number 5, where there is failure to delegate relatively simple tasks. Something is supposed to be done by a subordinate, but a senior manager refuses to let go such simple tasks. That's a good indicator that fraud could be taking place. Number 6, no checks to ensure only appropriate employees are recruited by taking references. Now it reaches the time for recruiting staff. Somebody does not even bother to check the background of that staff being recruited. I want to tell you the risk of doing that. You could be bringing into your organization somebody with questionable characters. Please be very careful when you're doing recruitment. Otherwise, you could be importing fraudsters into your organization. Number 7, no checks to ensure that only appropriate suppliers are used. You fail to check existence of conflict of interest. Now, procurement process is a very good place where people who are shrewd commit fraud. Please, when you see that procurement is being done without bothering to check existence of conflict of interest, my friend, that could be a very good ground for fraud to be committed. Number 8, lack of appropriate response to queries from management, suppliers, auditors, bankers, or lawyers. You know, where there are signs of mistakes committed, managers ask questions, auditors ask questions, lawyers or bankers ask questions. But whenever questions are asked and nobody responds to those questions appropriately, I'm telling you, that is a sign that fraud could be taking place. Number 9, suggestions that internal controls have been overridden by management. Where managers are allowed to override laid down controls. One likely reason for overriding of controls could be that somebody somewhere, whether junior staff or senior staff, could be committing fraud. Number 10, rumors and tip-offs relating to fraud not dealt with. You know, one good control is if you hear of grapevine information or rumors or whistleblowers indicating that fraud is taking place, please take them seriously. But where such information is not followed up or not even dealt with, that is an indication that fraud could be taking place in that organization. Number 11, indication that internal financial information is unreliable. Where there are indicators that financial reports are not making sense, where there are indicators that financial statements are not reliable, that is a good indicator that some kind of fraud could be taking place in that organization. Number 12, failure to correct major weaknesses in internal control. For example, there are lack of checks and balances. Somebody initiating a transaction and finalizing the transaction without somebody coming in between them. and yet the management fails to make correction to this weakness, that failure of management could be a good indicator that fraud is taking place in that organization. Number 13, no enforcement of staff taking leave. You know, it is very important that after 1 year or periodically, regularly during the year, a staff should be told to take a break. Where staff do not go on leave, one likely scenario is that that staff that does not go on leave is covering something that has been doing in that organization. So where you find an organization where staff do not take leave, my friend, I'm telling you, chances are that such a staff is committing a fraud. Number 14, where accounts office do not keep up with operations and books apparently being in a mess. There are mistakes that have been reported in accounts office. Probably you engaged external auditors and they are giving you information that the books of accounts in this place is in a mess and nobody is taking corrective actions. That could be an indication that the mess that is being committed in accounts office is a cover-up for fraud being committed. Number 15, where there are loss of records or other information. You are looking for receipt books. The receipt books, the answer you are being given is that the receipt books have disappeared. You are looking for bank statements. The information you are being given is that these things are lost. Where there is loss of records or major financial information, that could be a cover-up for fraud being committed in that organization. Indicator number 16 that fraud could be taking place in your organization is lack of seriousness by management in business control, especially internal controls. You know, managers are supposed to be supervisors or custodians of internal controls. And where it is the same management that are not serious with internal controls, my friend, you are the business owner. Something wrong could be taking place in your organization. Probably this is an indication that fraud is taking place. Therefore, take such management weakness seriously. Number 17, unusual transactions that have a significant effect on earnings. Where you see certain entries being made in your records, probably that entry is indicating that there is a major expense that is reducing on your profits. My friend, raise your antennas. Where that item is big and material in nature, find out details about that major transaction. Otherwise, it could be a transaction meant to cover fraud fraud in your organization. Number 18, payment for services that appear excessive in relation to services rendered. For example, consultancy services. There should be a market price for every service that is rendered. You should be aware of the prices in the marketplace for such a consultancy or such a service taking place. But when you review the records and you realize that the amount that is being paid for that service is somehow appearing excessive, chances are that fraud could be taking place in such a transaction. So find out details about this excessive payment. Number 19, results that are not in line with industry. You know, industry have average in terms of profits. But when you realize that income or profits are not at par with industry averages, my friend, something is not right. For example, you find that profits in a certain industry is about 20%. 20% of the cost or 20% of the sales value. And now yours, instead of appearing at around 20%, your returns are indicating that your profits are only 5%. My friend, there is a problem. So when you find that results are not at par with the industry results, that could be an indicator that fraud could be taking place in your business. Number 20, cash constraints in an otherwise profitable business. You're making good sales. You're making good returns. But you're being told that you don't have money in the bank account. That lack of money in the bank account could be a good indicator that somebody is fleecing your bank account of money. Indicator number 21, deteriorating earnings against industry trends. Sales are lower than what the industry players are making. My friend, there is no way that you are in the same industry that is making high sales, and yet in your business, your sales are very low. That is a signal that something wrong is taking place in your organization. Number 22, rising profit trends associated with contemplated public offer of shares. When the profits are rising because they have made an announcement that there is going to be a public offer of shares, I want to tell you that something is not right somewhere. There could be fraud. The public could be defrauded into buying shares or at a value that is not worth the value of that company. There are some fictitious sales that are going on. That is why you are seeing returns of profits rising when they have just announced a public offer of shares. Number 23, inappropriate accounting practice. For example, the valuation of shares is done in such a way that is showing that the assets are of a higher value than they are supposed to be. In fact, overvaluation of assets is one of the ways that companies commit fraud in an organization. Number 24, managers engage in frequent disputes with auditors. Auditors are there to complement management of a business. Auditors act as an independent eye to the owners of the business. Where auditors have given their findings and your managers are in constant dispute with auditors, that dispute is an indication that the managers could be committing fraud, and that is why they are in constant dispute with the auditors. Please take care. Raise your antennas when you see constant dispute between auditors and management. Number 25, management decisions are dominated by an individual or a small group of people. If you find in an organization where one person dominates management decision, that person could be domineering other independent minds that could otherwise prevent something from taking place. So where you see an organization where decision making or important decisions are dominated by only one person, my friend, take care. That person could be covering up for a wrong that has been done in that organization. Number 26, managers display significant disrespect for regulatory bodies. Where there is such a thing taking place, my friend, that business is in danger. That business may be committing a fraud. Number 27, where accounting personnel are lax or inexperienced in their duties. Where you see a laxity or some kind of reluctance or some kind of inexperience on the part of the accountants, my friend, you are in danger. Because they are supposed to know what they are supposed to do. But where you find they are inexperienced and they are making major accounting decisions, that could be a very good ground for fraud to be taking place. Number 28, decentralization without adequate monitoring. Decentralization is very good because somebody should not do everything. But where you decentralize or where you delegate and you don't monitor what these delegatees or subordinate staff are doing, that could be a good breeding ground for fraud. Therefore, when you decentralize or when you delegate, please monitor to prevent fraud from taking place. Number 29, excessive number of checking accounts. Very dangerous. When you have bank accounts in excess, my friend, you might not closely follow up what is taking place in each and every bank account. So the more the number of bank accounts that you operate in your organization, the more the chance that fraud could be taking place in your organization. Number 30, frequent changes in banking accounts. Today you open this bank account, you close it. Tomorrow you open another bank account, you close it. Something could be taking place that is fraudulent. Therefore, if you want to prevent fraud from taking place, maintain same bank accounts. Do you know why a staff who is handling a bank account could want to close it and open another one? Probably he is failing to collude with the bank staff. Probably in that bank staff, somebody is not playing to his music. Therefore, he says, no, let me close this bank account and open another bank account. Therefore, you are supposed to avoid the opening of one bank account after another, one bank account after another. You need to take care so that you maintain your bank accounts. Number 31, frequent changes in external auditors. Where auditors are being changed at a high rate, that could be an indicator that this one auditor that is being dropped could have resisted the temptation of being manipulated. Therefore, because he's not towing the line, he's being dropped in favor of a new auditor who may toe the line. So frequent changes in external auditor could also be a good indicator that fraud could be taking place in your organization. Number 32, significant downsizing in a healthy market. There is no need for you to downsize your business if you are in a market that is healthy. But if situations and business returns force you to downsize, my friend, that is an indicator that fraud might have been taking place behind your back. And I want to go to number 32, continuous rollover of loans or top-ups. You took a loan to help you expand on your business, and this loan is not helping you. You are going for another loan and another top-up and another top-up. That is a very good indication that this loan did not help you in your business. Therefore, that could be an indicator that somebody somewhere in the organization could be defrauding you of your income. That is why you continue borrowing, and you don't see the benefits of the loans that you've borrowed. Number 33, excessive number of year-end transactions. At the end of the year, when you see there are numerous transactions, my friend, watch out for this year-end transaction. Within those many year-end transactions, some of them could be fraud or fraudulent transaction. Therefore, raise your antennas and find out why there are many transactions at the end of the year. Number 34, where there is a high rate of employee turnover. When your employees are leaving at a high rate, my friend, something somewhere is going wrong. Find out why. Why is it that they are leaving? Some leave after committing fraud. Some leave after resisting fraud. Therefore, high employee turnover is also an indication that some fraudulent activities could be taking place in your organization. Therefore, find out and try as much as possible to stop high employee turnover. Dear listener, I want us to stop there for now. We are going to come back and continue with these red flags of fraud so that you as the business owner, you might not collapse suddenly. You might raise your antennas when you see certain activities taking place in your organization. Thank you and stay tuned.